Hello, everyone, and thanks again for joining us here on the Crypto Weather channel. Today, we want to talk briefly about the mother of all trades, the trade that we mentioned on Facebook a couple of weeks ago. As promised, I just want to briefly describe, what this trade is, and why we make it and why we consider it the mother of all trades, and it really is the only trade that we make here on the Crypto Weather channel. It's a very long term trade. It's the biggest trade that you can make, biggest winning trade that you can make, the longest and with the most gains. And you'll see why here in a second here. So basically, the entry price for this trade is going to be obviously at the beginning of the bull market. So here we have our category one price line. You remember that's the official start of the bull market. So that's going to be our entry price. Our stop loss is going to be down here at the market cycle low. Right. So, if prices, fall back below this market cycle low, we you know, it, we just want to be out of the market because, I mean, this has never happened. In my opinion, that would be a valid reason for people calling for Bitcoin to go to zero, even though I don't believe it's going to zero. I feel like that would be the only time where that would warrant that sort of reaction. And then so our take profit is going to be up here at the future halving price. I know as of right now, this is the future halving price, but before all is said and done in this cycle, the fifth halving um, will be eventually the future halving price. So that's the end result for this cycle. The fifth cycle's future halving price. We're expecting to reach sometime here in 2025. I believe that is 3, 4, 5. Yes. So sometime here in 2025, we're expecting to reach this future halving price. Obviously, we can go up above it. Not really interested in how far it goes up above the future halving price, because once we reach this point, it's really all FOMO. Because as you can see here in the last cycle, everything up above the future halving price is just it's always FOMO every single time. So we don't want to be up there in that mess. So once we get over the future halving price, we're going to be taking some profits, right? So if not 100%. All right, so let's get all those out of the way, and let me bring up the actual trade here. It's our long position. So this is what it looks like. All right, so like that. All right, so as you can see, as I mentioned, our stop loss is down here at the market cycle low, and then this is our take profit is up here at the future halving price. So this is a very long term trade, as you can see. We're currently in 2023 as of the recording of this video, and we're expecting to ride this trade out for the next 2.5 years maximum, because normally we reach our all time high sometime in December of crypto fall, crypto autumn, right? But as you can see in the last cycle, we got there a lot earlier. It was January of crypto autumn where we reached the future halving price, which is where we're expecting to get out of the market. But the all-time high, didn't come until December. So we are expecting, sometime in 2025, that's where we'll be exiting this trade. because we'll either be up above the future halving price or somewhere close to it, up there in that FOMO zone. So let's bring up the let's see how this trade is doing right now. So as I mentioned on Facebook, this is a fantasy trade, because we don't give trading advice here on the Crypto Weather channel. This is a reflection of a real trade, but it is not a real trade. It's a fantasy trade, right? And so what I said was, imagine, you know, the Crypto Weather channel had a bank, right? And that obviously banks have capital reserves, money that they have sitting aside that they don't really need to use for a very long period of time. Um, it's mostly there for a rainy day or for long-term investments, which this is would definitely be a long-term investment. So basically, I explained that you know the bank has uh, takes a percentage of its capital reserves and it basically invest that in Bitcoin to make some gains on their capital reserves, right? And so this is money that we're not going to need. Um, this bank is not going to need for the next at least 2.5 years maximum, right? So because after that, we're expecting to be out of the market as prices start coming back down in crypto winter, right? And this doesn't even necessarily have to be a bank. You could even compare this. Imagine a family, right, with a savings account, and they take a percentage of their savings that they're not going to need for the next, at least 2.5 to 3 years, from where we are right now, right? And they take that percentage and they store it in Bitcoin in order to realize some gains on their savings, right? So, say for example that percentage is $1,000, right? They take that $1,000, they buy $1,000 worth of Bitcoin on an exchange, and then they transfer those Bitcoins to a cold wallet, right? And they're just gonna hold them there until 2005, early 2005 at the latest, and then once we start getting up close to this the future halving price, they would then uh, move those bitcoins back to the exchange in preparation for a sale, right? And then once we reach our price target, we go ahead and sell those bitcoins for some US dollars or whatever currency that you're using in your country, right? So the maximum the percentage that we're expecting to see out of this is I think it was somewhere around 146%, right? So we're expecting to see 146%. So if you took $1,000, right, and bought some Bitcoin, right, at the future halving price, I mean, excuse me, at the start of the bull market here, as this trade illustrates, and you held up until the future halving price, right? So you would get 146% gains. I mean, you're really not seeing those gains really anywhere in the market and any other asset, right? And so, I mean, it's really a grand opportunity, right? And so, if you took $1,000 and bought $1,000 worth of Bitcoin, right, and so when you sell at 146%, that means you more than doubled your money, right? So that's 1,000, roughly 1,000, um, you know, um, um, let's see, roughly $1,460. Sorry, I had a brain fart there. 1,460 right there, that you just made, just for storing your capital reserves, your savings, or whatever in Bitcoin. So right now, this trade is let's see, let's bring it up here. It is we're roughly looks like just over 12% in the positive. And as I said, this is a fictional trade, a fictional bank, right? So we bought $1 billion worth of Bitcoin. At the time, it was 37 Bitcoin, and we are $124 million in the profit, right? And so once we reach the future halving price here in 2025, we were expecting well over $1 billion in gains. So, I mean, this is, like I said, it's a grand opportunity. Hopefully, it plays out and, um, as we expect, but we'll just have to wait and see here. So let's zoom out here and look at the grand scheme of things, right? And so this is look at the past performances of this particular, close that here, of this particular trade. Now, obviously, the crypto weather channel did not exist and the data wasn't there, right? So it's impossible to have really made these trades based on the data that we have now because the data didn't exist back then, obviously. But it's just this is just to show you, what this trade is most likely going to look like. So as you can see here, the first bull market there um, wasn't even 2.5, 3 years. It looks like just over a year and a half, maybe from April to December, right? So um, that's this is basically how that trade plays out. The second bull market there as well was the same deal. We entered the market in crypto spring at that category one price line, beginning of the bull market, and we held all the way until the future halving price there. Same with this past previous bull market here. All right, we held all the way until crypto autumn, until we reach that future halving price. Excuse me, there. That's these two future halving price lines always confuse me because they're so close together. Because obviously, as you can see, the jet stream is starting to curl over a little bit. Um, it still remains to be seen if this is going to curl completely over or if it never really actually reaches a maximum. I believe it never really actually reaches a maximum. It just keeps um, the incline keeps decreasing at an infinite amount. So it's sort of logarithmic there in nature. So, um, but yeah, so that's this trade here went up to this future halving price here. I believe this was the fourth halving's future price. So, so we actually did a double hit there. So we not only hit the fourth cycle's future halving price, but we also hit the fifth cycle's future halving price as well. So, all right, and so this is what this is going to look like. This trade is going to look like. So we'll go ahead and draw that one on there as well. That's our general direction. Obviously, there's going to be some choppiness in there, a lot of choppiness, but that's the general direction that we're expecting. This trade, this investment. I don't even like to call it a trade because it's so long term. It's more of just it's just a very huge, large, successful, long term investment. Is basically what it is. And also another thing I wanted to mention too, in this cycle, obviously we had that double bull market, so you actually had two opportunities to really get in there. So that's great when that happens. All right, and so let's bring up real quick the cumulus triangles. All right, we mentioned in our last the last video. I'm going to get rid of this line. Okay, so just to touch real quick on some short-term stuff here, just in case you didn't get a chance to look at it yet. But please do go and check out the video on the cumulus triangles. It's a very important information going up into the halving, because as we said, we're expecting that there's two parts to the cumulus triangle. There's a lower and an upper, and we're expecting us to stay in this. So here's the upper triangle here. Goes a little bit further up, and then we have the lower triangle here, which is sitting right below the future halving price, the current future halving price, right? And so we're expecting to stay in this lower triangle here, right? So the choppiness going up into the halving could range anywhere within this triangle here as we approach our projected future halving price. So we're just gonna sit tight. We're in this thing for the long run. We're just gonna sit tight and see how this thing plays out. But we will definitely keep you posted as the situation develops. Thanks for watching.